Let's talk about the range. Okay, this is a very important concept that is explained in this lesson, but instead of using screenshot and everything, it is better with the video. And this is video talks about this scenario on the EuroCAD daily time frame, which has been used. This example has been used to explain the downtrend, the uptrend, and the out of alignment stages. Okay, but we're going to use this also for the range example, and then we're going to use, I don't know, like Alibaba or Race, Ferrari, which have well, very clear examples of ranges. Okay, so first of all, in order to have a range, okay, we need, a range is defined by in this case, when we are talking about supply and demand, we need like demand somewhere and we need supply somewhere. So when we see where price is located, we will be able to see how high or how low the price is according or between, how high or low depending on the imbalances. Okay, so we need supply, we need demand. So if price like here is at 50%, if we have like supply here and demand there and prices like over there almost touching the supply level, this is very high and we shouldn't be thinking of buying but selling. Okay, so this is a supply level, okay, responsible for eliminating demand somewhere, and this is also a supply level. Okay, why? That one is supply level. So it is a supply level because it broke the trend line. This is the origin of the move of the trend line, so that's supply. Okay, poor supply because it only has one ERC. We're going to talk about that when we do the scoring of the levels. Okay, so what happens here is that we have the trend line, okay, broken, and a demand level right at the origin. Okay, so what happens here when price approaches before the trend line is broken, as explained in the out of alignment stage, when price is very close to the imbalance, the supply level, okay, then we say it is very high in the range and we shouldn't be buying on smaller time frames. Okay, and how do I establish a range? So here, this is 100%. We always use the proximal line. So the proximal line for the supply level is the line right underneath, below the structure, and the proximal line for demand should be the one at the top. Okay, this is the proximal, this is distal for supply, this is the proximal, and this is the distal line. Okay, so when price is very near or at the supply level, near the proximal line, we say that it is very high in the range. Okay, so we shouldn't be buying, we should be selling. And that, these on the smaller time frame should have provided with nice profits. Okay, so what do we have right now? So this is high, this is like in the middle. Why? Because this is 100%, 0% or 100, and this is 0. Okay, so from there to there, where is this price right now? Diddling in the middle. Okay, right in the middle, in no man's land. It could go like this or it could go like this. So what happens is that price continued to rally, eliminated the supply level, and now, as explained in the out of alignment stage and the uptrend lesson, so what we have right now is an uptrend. Okay, so for the range to be established, you need two variables, and one of them is a demand level and another one a supply level, because if we don't have two opposing imbalances, how can we know if this is high or low? Okay, so now where is this located right now? If I draw a horizontal ray line like that, and this is the proximal, remember we measured the range from the proximal line to the proximal line between the demand and supply levels. So this one happens to be like right in the middle, isn't it? Like this one was in the middle based on the proximal line here. So it's right in the middle, there's no obstacle. So this is probably going to happen in the next couple of days, or like this, and from there continue to rally. Okay, so since we have an uptrend and the price of the EuroCAD is at 50%, we are okay to go long at smaller time frames using the 4 hour and 1 hour or even smaller time frames. Okay, because there is a lot of room for price to reach that area of supply. So when price approaches like very close, okay, to the supply level right at the top, we should be thinking of exiting our long positions, because even although this is not very strong, this is an obstacle, and probably price will drop like this. Okay, it could continue like that, but it's like a little bit silly if you're doing intraday or swing trading to hold a position when you're expecting a reaction. So you're going to be giving away a part of the money that you earned on the way up. Okay, but we talk about that in the trade management, okay, lessons. So right now we have the EuroCAD in the middle, 50%. Why 50%? Because this is 100 and this is 0. We measure the range between the opposing distal lines between demand and supply. Okay, so since we have price within the 50% or even 60, 70, we should be able to buy. Okay, still buy. Okay, if price is like 80, 85, forget about buying anymore. If you are not long in smaller time frames or holding a position from bigger time frames, when price is very high in the range where the supply level is very, very close, forget about buying here. That's stupid. Okay, so you just have to use common sense. So the range requires two imbalances. Okay, unless it is an all-time high scenario, when we do not imagine this is an all-time high scenario. We're going to look at it now. Okay, I'm not going to ask you to imagine. I'm going to use some all-time high scenario. So, and this is the range. Okay, if it is too low, forget about selling. If it is too high, forget about buying. Okay, that's it. It's very simple. So if we go, for example, now in a position like race Ferrari, okay, the Ferrari is a very well-known car manufacturer, Italian one, but it's also trading in the New York Stock Exchange, okay? And this trade was mentioned in Central Carolina Trading Academy. So I'm going to pull it up one sec. So let's go to the website, and here we're going to look for Ferrari. Okay, race. Okay, so Ferrari has got the weekly demand level trying to play out. Okay, so what does it mean? It means that if it is too low in the range, which is, I mean, on smaller time frames on the way down, you could have sold short Ferrari shares of stock or using bearish option strategies to go short, which is ideal because selling short, it's well, very risky and very, very risky. Okay, so what happens? Let me pull it up here. Ferrari. So what do we have here? We've got the demand level on Ferrari playing out. Look at the reaction on Ferrari. Okay, so in the smaller time frames, you're just using like the daily and everything. On the way down, it will be like down, 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 down until it reaches the proximal line on the daily, and then from there, Ferrari has already rallied like 8.5%. Okay, so and this is all-time high. If I zoom out, there is nothing above. So how do I measure the range? Okay, so it is very easy. So price rallies up to there. Okay, and we draw a line there. So this is the proximal line, and we're going to use the highest high printed by the impulse as the 100%. Okay, so when price starts to drop and it gets very, very close to there, like 5%, 10%, we stop selling if you're using smaller time frame strategies. And once the demand level gains control, then you start thinking of going long, which is what is going on. I mean, there's room to reach that impulse and then breaking all-time high. So hopefully that will happen. And this is this is a concept. I mean, obviously you need to know why this is an imbalance, as you will learn in the lessons, how this imbalance is created after all-time highs is broken and there is an impulse which is twice the width of the imbalance, and this impulse consolidates away with at least one or more candlesticks, full candlesticks without touching the proximal line, consolidating away, then we have an imbalance. And that's why we have this playing out too. Very strong imbalance. I mean, if you zoom out a little bit, the only place where we have 3 large candlesticks is there. See, we have 1, 2, 1. This is not a large one, 2. So that's like the strongest impulse in many, many months on Ferrari. Okay. So when price is very close, like a 20, 10% near the proximal line, forget about going short in smaller time frames. So if you take a look at the 1 hour, okay, the 1 hour was like, wow, look at this bearish gap. Okay, short, it's a rally, and then another gap, and then suddenly when the proximal line of the weekly demand level gets control, it's like a low, low, then suddenly high, another high, another high, another high. Okay, and this is a gap that is going to be filled next week. Today is the 7th of December 2024. Market is closed, it's Saturday, and I am using like this calm day to record some videos and update the course. Okay, so, and this is it. I mean, it's a very simple concept, but if you are not aware of where these imbalances are and you are not even using the weekly time frames, and that's a huge mistake, as you can see, or you will be like, okay, Ferrari is being dumped, and then you probably will start reading about negative news and everything, and everybody is selling short. Here we have a positive news. Okay, last which day, in November 5th of November, and what happened after positive news? Okay, here was a little bit of a rally, and then where does it printed another low and reach where? The demand level on the daily and also on the weekly, as explained on the website. Okay, I said here, weekly demand is in control, refer to the last update, this one over here, and strong daily demand one just gain control too, long bias. So we're expecting this. This is the alert for me to say, okay, this is a winning trade, and that happened. Yes, it did happen. Okay, so, and this is it. I mean, do not get obsessed with this. Okay, it is a very simple concept. Okay, so at all-time highs, the range is measured by the strongest, the highest high reached or obtained or printed by the latest impulse, and the demand level. Obviously, the impulse has to rally and consolidate away, and this is like 100%, probably 90%, 80, 50%, 40%, 30%, 20. Forget about selling if you are doing short-term sales. Okay, and then once the demand level is in control, you buy, because this is an uptrend. Okay, on the weekly. Hopefully this concept will be clear to you, because this is crucial. Okay, but you need to use the bigger time frames. If you start trading and you use only the daily and the 4 hour, the 1 hour and everything, you will not be aware of the bigger time frame imbalances, and that's precisely where the big boys are, and the institutionals are placing their trades, the professional traders. So you need to know where they are. Okay, so you don't care about news events and everything, because we have demand, and usually when we have positive news, price drops, and when we have negative news, price rallies, if we have demand levels and supply levels in control. So let's continue with the course. Hopefully you are understanding these concepts, because they are, very, very important to trade supply and demand successfully. Have a great day.